Today, econ class, we're talking about checking accounts and banking services, and there's several types of checking accounts that I've attached a separate sheet that gives you some information about each one. I have a lot to go over in this PowerPoint presentation, and then I may have to post it as a separate video, but I'm going to demo the check and the check register. So today we're going to talk about check-in, ATM cards, debit cards, things that are as good as cash, which are called instruments, but are usually like traveler's checks and checks that you can go to the post office and purchase, money orders, those kinds of things, certified checks. We're going to talk about regular checking accounts. We're going to talk about check registers, how to endorse a check, a little bit about overdraft protection and how to stop payment on a check, how to cash a check, and how to fill out that check register to keep your account in balance. So that's a lot of information. So we've got to set our goals out. Remember, we've been doing this. Our goal to come out of this lecture is to be able to describe why we have checking accounts and each one of the forms that are associated with it, which are standard no matter if you're using a bank or other financial institution like a credit union or a money market account. They're going to look the same and the forms have the same purpose, so they're standardized forms. We're going to explain how to use a checking account, and we're going to discuss some of the types of checking accounts, and there's several of them, so I'm going to post a separate document that you can go back to since there's so many types. Okay, so the basic things that you need to know, we'll start with the basics of your checking account. It allows you to write checks and make payments, and that's good because you don't want to have to drive to the power company, to the water company, to DirecTV, and pay them in person, do you? You want to be able to pay them because you are enjoying their services, but you don't want to run all over town having to take care of your accounts. So a check is written in order to pay the amount stated, and on that check you write the person or the business that needs to receive the funds. A checking account is also called a demand deposit because the money may be withdrawn at any time, like on demand. So you guys order movies on demand, it's the same thing. They present that check, if you are paying the power company and they bank at BB&T and you bank at Smith River, then BB&T on behalf of the power company will present that check and demand payment from Smith River. It will come out of your account, it'll go over to BB&T and go right in American Electric Power's account. Okay, so the check kind of follows a route, just like your bus to get you to school follows a route. It follows a process through the banking system. First, the person that you gave the check to cashes your check. The bank that cashed this check returns it to your bank. Your bank withdraws the money from your account and sends it to the other bank. Then your bank stamps the back of your check indicating that it has been cleared. So way back in the day, we used to get our original checks back in the mail. I'm talking 5 years ago. And on the back, you could see that it had been endorsed. You get something a little bit different nowadays, and we're going to get to that. Okay. So, a canceled check is a check that has cleared your account. So, it's not good anymore. It's no longer active, so it has been canceled, and that's where that term comes from. Many banks no longer send paper checks to other banks for processing. To make processing faster and more efficient, they exchange check information electronically by transmitting an image of the check called a substitute check. A substitute check can be used in the same way as an original check. And for a substitute check, you would get a photocopy of it back in your check register at the end of the month. So that's how that works. You must also maintain enough money in your account to cover all the checks you write. So just because I've got a stack of checks doesn't mean that I can write checks over and over and over again without depositing more funds in the account. So you're standing good for that amount that you're putting on your check. And you want to make sure that that amount is already in the bank before you write it. A check written for more money than your account contains is called an overdraft. So if a regular check is a draft, and when you write for funds you don't have, you've gone over your account balance, it's an overdraft, or a bounce check. A bank that does not honor a check usually stamps the check with the words "not sufficient funds" and returns the check to the payee's bank. When this occurs, the check has bounced. The bank will charge you a fee for each insufficient funds check processed. So what this means is the payee, if I'm writing a check to Appalachian Power, they would be the payee, I would be the payor. So Appalachian Power's bank is BB&T. BB&T sent it over to Smith River Bank, which is my bank. Smith River says she didn't have the funds to cover it. They stamp it with this and send it back to BB&T. So BB&T will not show Appalachian Power that they've received any money from me because they didn't. And my bank is going to give me a fee because they had to go to all this trouble. The money should have been there to begin with, right? Okay. Sometimes people write checks in the hopes that their payments or they can deposit money into the account to cover the check. And this is called floating a check. Floating a check is very risky because today's electronic system allows checks to process very quickly, and it's also illegal in some states. So if you wrote a check this morning, you did not have enough in your account and you were planning to deposit $50 today, and that would be enough to cover it, then you may find yourself in trouble because they may already have demanded payment from your bank before you get to your bank to make the deposit. Another thing that might happen is when you make a deposit at your bank, they may hold it before they put it in your account. A day or two to clear. If it's a check, if it's cash, it generally goes in the same day. All right. Why do all this, you're saying? Besides running around town to pay your bills, which this prevents because you can mail payment, it's just convenient to have your money in one place. Say you're going over to buy some groceries and you get several things and you're planning to pay cash. But when you're going down the aisle, you remembered something that extra that you needed and you didn't bring enough cash with you, but you have some money in your account, you can always write a check instead of using up your cash at the grocery store. There's safety in checks. If you drop your cash on the ground and don't notice it, somebody else picks it up, it's theirs, right? A check has to be written to a person, it has to be signed, and it has to be presented to your bank. So it couldn't be presented by someone claiming to be you, but they're more likely to get caught and not get your money than if it's just cash. You have a built-in record-keeping system because you've got those debits and credits that you're going to place in your check register. Then you can really see where your money goes. You can go back for a month's worth of transactions in your check register, and you can count up how much you spent on groceries, how much you spent on gas, those kind of records. And it also gives you access to other bank services. If you have a checking account and you receive payment from your employer in the form of an actual check, and you go there to cash it, they don't charge you anything. If you don't have a checking account and you receive a check from your employer, many banks will charge you a fee, and also some stores will charge you a fee to cash your check. So they'll take a little bit of your money and hold it for the problem of keeping that cash on hand for you. When you go to open a checking account, you're going to at least need an initial deposit, and some banks have a minimum deposit. We talked about this with CDs, that they want you to keep there like a buffer. There will be a signature authorization form, and within the past year or so, even our local banks, even though we live in a rural area, often have your picture. They'll take your driver's license and scan it, and so when somebody tries to access your account, they have your picture from your driver's license, and that's going to prevent someone from getting to your money. So you'll need to take a photo ID. Most banks will not issue accounts to people who do not have a social security card, or they're not citizens. Okay, most banks. Only a few banks will issue those accounts, and we may see that change in the next few years, but for right now, it's really something that it's a federal system with federal insurance on it, and we've talked about that in a previous video, the Federal Deposit Insurance Company. So that's something that most banks don't like to issue accounts to non-citizens. Now let's talk about the parts of a check. Here we have Artie's Johnson. So that means that all the checks written by Artie's Johnson come out of Artie's Johnson's checking account. So there's a series of numbers at the bottom. The first series of numbers from here to here is the bank's routing number. So no matter where you are in the United States, each bank has been given a specific number, and that number is going to be unique to that bank. Therefore, everyone who has a checking account at that bank, this same series of numbers is in the first slot. The second series of numbers is the actual account number, and then also some banks add this number, the check number, to the end to track the transaction. So you may see that. So who are we writing? Who is Artie's Johnson writing the check to? He's writing it to Food Mart. So this is the payee, and it actually says on the check, paid to the order of Food Mart, because remember, this is on demand, that they can demand payment. When did they write the check? On July 1st, and they didn't put the year, so that's not really good. A bank's not supposed to honor that. This is the amount in numbers. This is the amount again in words. And this reason these two things should match up is to protect you. Suppose I put a 0 in here so perfectly that I covered this dot up, the decimal point. And so then it would look like $36,012, wouldn't it? So that's why you also write it out here. So this is actually $36.12. So you write on this line 30-6 for the dollar amount, and the fraction 12 out of 100, which is what the cents are. And then we draw this line so that nobody can add anything into our checking account. They can't make, if they change the amount over here, if they have all this space, they could in fact change this amount here and get more money from you than what you intended to pay them. This is the name of the bank. This is a memo. So they paid Food Mart for groceries. Some people use that, some people don't. And then of course, it's not any good until it has that signature. So we're gonna put them all up here. Okay. Okay, use your checking account. You use it to write checks, pay bills online, make deposits, use a checkbook register. And a checkbook register is a booklet used to record checking account transactions. And we're gonna have a register, write a couple of checks in our assignment that goes with this lesson. All right. The process of matching your checkbook register with the bank statement is known as bank reconciliation. So suppose you made an error on that $36 check and you wrote in your check register $86, which is easy to spend $86 at the grocery store. You may not realize that you made that $50 mistake in your check register until you get your statement from the bank. So you may have written down that you wrote $86 to Food Mart. When you get your statement from the bank, it'll show $36, and then you can make that correction to show that you really had an extra $50 according to the bank reconciliation. So, ending balance shown on the bank statement. So when you receive that bank statement, it's going to say ending balance. It's usually on the top right. The total of all credits and deposits made but not shown on the statement. So if nothing happens, zero, then you should have the same thing, 926.68 here. So you write the ending balance, you add the credits or deposits not on the statement, bam, put them here. You total those lines and you get this line 3. List the checks, withdrawals, and debits made but not shown on the statement. So there's usually a day or two between the time that the bank prints the statement and you receive it in the mail. And we know that we're all busy, and you may have written a check or two, so you want to make that amount. So we wrote check 582 for $600, and we wrote we have here SC for 20 cents. So that was probably a service charge. So $600.20 was spent between the time that the statement was printed and the time that you received it. So that means you actually have 926 minus 620. That means that you actually have $326.48. So don't forget when you get your check register to account for the activity in your banking account that has happened in between. So these are our outstanding transactions. And so we should be able to get back in balance now. So again, the 326.48 is our balance. Okay. When you endorse a check, you're endorsing, you said, yes, go ahead and pay this. A check generally cannot be cashed until it is endorsed. To endorse a check, the payee, that means the person who's receiving the funds, signs the top part of the back of the check in ink, no using pencil. There are 3 major types of endorsements. They're blank endorsement, special endorsement, and restrictive endorsement. And you are carrying a little bit of risk when you use a blank endorsement. All right. A blank endorsement is the signature of the payee written exactly as his or her name appears on the front of the check, and I've got nothing to add to that. So the check on the front will say Donald McLean. He has to sign it as Donald McLean. Suppose your granny writes you a check and she calls you your pet name and then your last name. You have to turn that check over and endorse it with that pet name at the beginning and your actual last name in order to receive payment. Okay? A special endorsement or an endorsement in full is an endorsement that transfers the right to cash the check to somebody else. So, paid in the order of Diane Jones, Donald McLean. So Donald is signing it because the check is actually written to Donald. But he's saying that Diane can demand payment for the amount written to Donald. Okay. Restrictive endorsement restricts or limits the use of a check for deposit only, United California Bank, account number this, Donald McLean. Okay. Suppose you are the treasurer at your church and people have written checks to the church. You wouldn't want the person who's taking the money to be able to put it in their own account, which is that's highly illegal and immoral. You want to make sure that they all go in the church's account. So this might be what you want to write for deposit only. Say it's United Methodist Church, and you can put the account number on there and sign it in that way, so that every bit of the funds can be demanded to go into a certain account number. All right. Now there are some other types of checking accounts. I'm posting along list of lessons, but one type is a joint account. So you're married, your spouse and you both have a checkbook. You're out running errands. Suppose one spouse goes to the grocery store, the other spouse goes to the home center and to buy some nails or something, and both of you can write checks off of the one account, even though it's the same day at the same time. Yes, special accounts, again, using the church example, that would be something that maybe they don't write a lot. Maybe it's a building fund account that they don't write a lot of checks out. They mainly deposit and try to grow. Interest-bearing accounts, which I mentioned to you in the last video lesson, and share accounts. All right, what do we want to know about all this? Banking services and fees. Our goals are to describe banking services available at most financial institutions, list and explain fees charged by financial institutions for the services. So they collect money not just from interest on loans, or if they take money in and invest it in stocks or mortgages, okay? They are also charging you because they're providing services, and those service fees have gone up and up. I read just recently that there's an average of 30 types of fees that can be associated with a checking account. All right. So a full service bank is one that offers every possible kind of service, from savings and checking to credit cards, safe deposit boxes, loans, and ATMs. ATMs, are those little machines where you can get cash out at hours of the bank is not open for business. Other services commonly offered are online banking, telephone banking, certified checks, cashier's checks, money orders, and debit cards. Most banks offer that Federal Deposit Insurance Corporation insurance, which protects the deposits customers against loss up to $250,000 per account. So if you have $500,000, you don't want to put it all in one account, okay? Because the insurance has a limit. They're only gonna reimburse you $250,000. So you want to have two accounts and split up your $500,000 into two different accounts. And you can have as many accounts as you need. You just have to remember you're liable for service charges. Guaranteed payment checks. A certified check is one that you get from the bank. It's a personal check that the bank guarantees are certified to be good. So before they make a certified check out to you, they will check your account balance. So suppose you guys are getting your first car and you're paying half and your parents are paying half. They may get a certified check from the bank and take to the car dealer, and the car dealer would feel a little bit more confident since taking that check, since it's certified by the bank. They know the funds are there. A cashier's check, also called a bank draft, is a check written by a bank on its own funds. So the bank is standing behind it on its own funds. Traveler's checks are check forms in specific denominations that are used instead of cash while traveling. So you might have checks for $20 and a whole stack of them in your pocket. What the advantage of having traveler's checks over cash is this. Number one, the bank stands behind it. Number two, even though you're paying a fee, you're only paying insurance, because if you lose that traveler's check, then it'll be replaced by the bank and you will not really lose all of your money. Okay. Another thing about traveler's checks that I forgot to mention is some businesses, if they're not local, are a little nervous about taking your checks. They don't know you. It's maybe not have a bank that they're used to dealing with, so they won't take out-of-town checks. A traveler's checks gets around that problem. Banks sell money orders to people who do not wish to use cash or do not have a checking account. A money order is like a check, except that it can never bounce. There is a charge for purchasing a money order, and you can also purchase money orders through the post office and local merchants. So you actually hand somebody the cash plus a fee, okay, and then they will give you back the money order, and the payee again can trust, full faith and credit that they're going to receive their funds. Can't send cash through the mail, so if it's somebody in your family in another town that you need to send money to, you could get a money order really quickly and send it over. Debit cards, plastic card that deducts money from a checking account almost immediately to pay for purchases. The debit card is presented at the time of the purchase, and when a debit card is used, the amount of the purchase is quickly deducted from the customer's checking account and paid to the merchant. Now, I had a friend a few years ago who opened a who newly added a debit card to her checking account, and when she went to buy gas over in Martinsville, she swiped that debit card. She didn't have very much money in her account, but the gas station just set aside an amount, like an average amount. I think it was like $38. And so when she went somewhere else to pay for something, she didn't have enough money in her account. She'd only gotten 15 in gas, but that gas station was holding $38 of her money, and it takes like 2 days to get it back before the real amount rolls through. So it's like a marker that they had against your checking account. So you need to be cautious using your debit card at gas stations. Okay. You can apply for to a full service bank for a bank credit card such as a Visa or MasterCard. So you may get a credit card that's like Mellon Bank MasterCard. Okay. It is a MasterCard. But Mellon Bank is the is the entity that's administering all of these transactions. If you meet the requirements and are issued a card, you can use it instead of cash at any business that accepts credit cards. Banks offer national credit cards usually charge both an annual fee for use of the card and interest on the unpaid account balance. So you may be getting, you've heard of double dipping, where you're getting double billed. So you just want to keep that in mind. Banks also sell overdraft protection. They're not being nice and just saying, if you overdraft, I'll cover it to $100. If they do cover it because you signed up for overdraft protection, they're going to charge you interest and a small fee. Okay? Overdraft protection allows you to cover checks or withdrawals up to a specified amount usually between 100 and 1,000, depending on how much you typically have in your account. So if you typically have $75 in your account, they're not gonna overdraft protect you to 1,000, okay? So it's not a magical thing. You're paying for it, and it's really dependent on how you've conducted your personal financial business with that institution. With overdraft protection, your checks will be covered even if you have insufficient funds in your checking account. So say if you made a mistake, remember the check that we looked at for $36? If it was really $56, okay, and you thought you only spent 30, but you spent 50, and you're off a little bit, you didn't have that other $20 to cover it, then overdraft protection would kick in, and you're going to only pay interest and fees on that $20, not the full amount of the check. It's just a good idea to be diligent in keeping your check register up to date so that you don't make mistakes, because those mistakes cost you dollars. Okay. Automated teller machines is often called an ATM. Instead of going to an actual person bank teller, you're letting the machine take care of the business for you. To use the ATM, you have to have the card. The card is electronically coded, and actually it's magnetic. Okay, if you've had me for science, you know about magnetism. Know your personal PIN number. You have to know that. That's a security thing to keep someone from using your debit card if you lose it or drop it. Getting cash is a common ATM transaction. Using a debit card, you can withdraw cash from your checking or your savings account. Using a Visa or Master, you can receive a cash advance electronically. A lot of these companies, Visa, MasterCard, limit how much cash advance that you can get. All right, online and telephone banking services are really convenient. They give you the ability to access your account from a computer or telephone anytime, day or night. So you don't have to be there before 5, before the bank closes. That lunch hour that banks take won't interfere with your business. You can do your work online. These services include transferring money from one account to another, paying bills by authorizing the bank to disburse money, getting account balances, and seeing which checks have cleared and which deposits have been entered. So if a lot's going on in your life, you can track it if your bank offers online banking. Again, just make sure that when you were in there, that URL is HTTPS. The S at the end means security, so that's supposed to be a secured transaction line. If you need to pay someone or buy something and there's no S there before the website name, you should not do that, because that means your information is vulnerable to being stolen. Okay. Online and telephone banking. Most banks allow and encourage electronic transactions of money. Really, they don't have to have somebody physically look at the check, make sure it's endorsed. It means that they can keep fewer tellers in the branch, which cuts down their costs and helps their profit. An electronic funds transfer, or EFT, uses a computer-based system that enables you to move money from one account to another without writing a check or exchanging cash. So what often happens is you may do business with a bank that's local to you. Like you might get a car loan through a bank that's on the corner from where you work. Well, you may have to move due to your job, or that bank may close, and because some of them have downsized, kind of like Sears, and so they're no longer in town. You can use an EFT, or you can pay your car loan bill online instead of having to drive to another town to take care of that business. Or you can still mail them a check. The EFT is going to give you a confirmation code right away, though, that you can write in your check register, and so that makes it just a little bit more secure than the mail. Okay, suppose you paid someone for a service and they did not provide that service, or they didn't show up to provide it, or you paid for something and you didn't receive it, and you want to stop payment on that check. What that means is that you can request the bank not honor a specific check. And this takes a little bit of effort on the bank's part, so of course there is a fee for that. Usual reason is that the check has been lost or stolen. Most banks charge a fee for stopping payment on the check. So if you know that you're really diligent in writing things in your transaction register and there's a check missing, you don't remember writing it, then that's when you would pay the bank not to honor this check. It's called a stop payment. Safe deposit boxes are boxes that are actually in the bank. Financial institutions offer customers a safe deposit box to store valuable items or documents. They can charge a yearly fee based on the size of the box. Keeping important documents and other items in a safe deposit box ensures that the items won't be stolen, lost, or destroyed. Somebody has to have an ID. When they come to the bank, they have to have a key. And then the bank also may verify their identity in another way before they'll even let them in the part of the vault that contains the safe deposit boxes. So you might want to put the deed to your house or your kids' birth certificates or your own, things that are really important to you and would be hard to replace. Say diamond necklace or something in your safe deposit box. Examples of items commonly kept in a safe deposit box include these certificates, deeds, bonds, jewelry, coin collections. It would be a heavy box. Okay. Loans and trusts. Financial institutions also make loans to finance the purchase of cars, homes, and home improvements, vacations, and other items. Banks can also provide advice for estate planning and trusts. Banks can act as trustees of estates for minors and others. A trustee is a person or institution that manages property for the benefit of someone else under a special agreement. They have notaries at the bank. A notary public verifies a person's identity, witnesses the person's signature on a legal document, and then notarizes the signature is valid. They usually have like this stamp, and it makes the paper 3D and raised. And they have a code that they're given by the state that they put next to their own signature. Financial institutions typically have a person on their staff who is a notary. This person provides notary services, and it's usually without charge. Okay? For non-customers, however, you'll pay a small fee, so that's another advantage of having that checking account. All right, financial services, they can purchase or sell savings bonds, which are bonds that are backed up by the government, the full faith and credit of the government of the United States. And some banks offer investment and brokerage service. So brokerage means with stocks. Or if you own stocks, some banks will be able to pay you the value, the current stock market value of your certificates if you bring them in and you've decided to sell. Okay, here comes the fees. Now they're doing all this different work providing these services. They're going to charge you for some of it. Bank fees to the customers to cover their operating costs. That's how they stay in business. The best way to avoid fees is to choose the right kind of account, choose the right bank, and don't make errors on your check register. Don't overdraw. Shop around to find the account that's right for you. And each account has rules. They're gonna tell you up front how they're gonna conduct business on your account so that you won't violate them and be required to pay high fees. So those fees are incentives for you to follow the rules of the banking account. Wow, there's a lot here, isn't there? Overdraft, insufficient funds. Every time you use the ATM, you can just hear the cha-ching going on. Per check, check cashing, trustee, if you're having them watch a minor's account. There's fees on loans, fees to return canceled checks, online bill payment, notary, that's usually if you don't have the account. Fees for those guaranteed payment checks, those certified and cashier's checks that you get at the bank, you pay to get that. Money orders, minimum balance fees if you go below that agreed upon amount, safe deposit, and teller service fees. Now, I haven't seen teller service fees anywhere local, Virginia, North Carolina yet, but it's probably coming. All right, so that's a lot of information. We're going to switch over now to the smart board. All right, so I started writing a check-in. Scroll down a little. We're going to write a check for $10. Other way. Other way. Keep going. Up, up, up. Up, up, up. Okay. We're going to write a check for $10.57 for groceries. We're paying Superbuy because that's where we're getting the groceries at. We're going to fill out the check. So today is 7/16/15. The amount is $10.57. As you remember, this smart board does not let me do any writing on it. Okay? All right, a little slow, hard to do this. We're going to put SB here for Superbuy, and we're all going to pretend that we wrote the whole thing out. So just S and B. Now, we're going to pretend that's perfect. So right here, we're going to come to this line, and we're going to write out 10 in $10.57. We're going to write 10 in words, T-E-N. Okay. Now, dollars is already on the check, so we don't have to write dollars. We're going to just say 10 and, A-N-D. Okay? We're going to say 57 cents is 57 100ths. It's a fraction, right? So 57 goes in the numerator and 100 goes in the denominator. Okay. Now we don't want to pay $100.57, okay? We don't want anybody to make any changes, and we've got all this extra room on the line. So we're going to draw a line across so that people can't go back and mess with our check and get more money out. Okay. For the memo, we bought groceries, so we're going to put GRO for groceries because if it's your own account and you wrote it for groceries, you probably know what that is. And then, of course, the signature would be James Morrison. A lot of times people's signature doesn't look that fabulous, James, and we're gonna go ahead and skip ahead to the next thing. All right, keep going. This is a deposit slip for James Morrison. He's been out writing checks. He's gotta put some money in the bank. So, let's go ahead and put the date on our deposit slip. It's today's date, 7/16/15. All right. Now, if James was getting cash back, if he took a check and he needs to get cash back, he'll have to sign this. But if he's depositing the full amount, he won't have to sign it.